I don't actually know your thoughts on this one. I'm guessing in one way here, but I would like to know if you think they're being opportunistic.
I would say if there weren't such a big short position, they'd be in real trouble, at least from their stock price perspective. Look, a few weeks ago, I wrote a piece for Empire, and I put it up on my Substack, my Herb in the Street on Substack, where I said, welcome back to Fantasyland, because that's kind of where we are. This is exactly what it is. I mean, think about this. Have people lost their minds, Kelly? I mean, look, Carvana is a market cap of about $9 billion, $9.3 billion as of a few minutes ago. That's more than AutoNation. It's almost as high as CarMax. That, my friend, is nuts. It makes no sense. Think about what we're talking about. We're talking about a company. I'm sorry, I get so worked up about this. We're talking about a company that did an arm's length debt restructuring with its founders. And then they're going to pay more interest rate. And then they're going to dilute. Hey, shareholders, you're lucky. You're going to get diluted. And then if you take a look at it, what did they really do? They really cut costs. They're still losing money. Oh, and you know, if you look at the press release, and this is the thing that gets me, just look at the press release. The headline of the press release: Carvana delivers best quarter in company history for adjusted EBITDA and total gross profit per unit. This is one quarter. It's adjusted EBITDA. If it wasn't for the short interest, I would say we wouldn't be sitting here having this discussion today.
And we had a separate guest.
The market, the overall feel of the market. Right
sure. Jim Geller from Rapid Ratings had warned a couple of months ago they had the worst financial profile of the major, auto names they cover. 43% short interest or something to that effect. So again, you're sort of saying sellers beware here. Market cap of Macy's, by the way, $4.5 billion. So Carvana is worth twice that. Now, let me take the meme trader side. I don't know who's in it, but let's just say, right? It's the future, Herb. I used to see their trucks up and down our neighborhood. They're being opportunistic, Herb. They're tapping the market's giving them the door, and they're going to do a Netflix. They're going to dominate the market, and then they're going to walk away with the last laugh in 5 or 10 years' time.
No, in fact, I'll say in 5 or 10 years' time, we're going to say, what are they going to be doing with those big towers they have, those elevators? Right. What are they going to become? Look, I give them credit for one thing. They disrupted the industry. They caused CarMax to have to go back and retool itself. I give them that. But the reality is they've got a ton of debt. They've got a lot to prove. They hire turnaround experts. Who knows what their financial engineering plans are here? But I would say that, we're back in a market that works for Carvana, and we're back in that market right now. Let's come back and see what they do next quarter and the quarter after that. Because that's what you really have to look for here. One quarter does not make a trend.
If you were the CEO, if they came and said, "Herb, listen, we think you do great work. We know we have
that would be stupid.
We know we're in a pickle." Wouldn't you be doing the same things right now? Paying off debt, using the equity. Who knows why? It's like what AMC did, right? They said, "I don't know. People are huge fans of the stock. We might as well, take the opportunity and go for it."
You will do whatever you have to do to get investors' attention and move the stock higher, because the higher the stock, the more finagling you can do with the financial community. Who knows if there's something else what else they have lined up here. But I think the business model has yet to be proven. Again, they were a great disruptor, and they did it. As we can see, the company blew up not because they were such a great company. It blew up because they had to bare their souls. And when people saw what it really was, look, it's a real business. We see the towers. They're not earning any money. They've got to prove themselves. And they haven't yet.
Would anything change your mind?
Yeah, if they start, if a forensic accountant can come in there and really go through the numbers once they start earning money and showing that this is genuinely high quality profits, and you can compare it to, say, a CarMax, yeah, maybe then. But I don't think that's going to ever be an issue.
Herb, thank you so much for joining us today. We appreciate it.